Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Thursday, May 29th, getting ready for the 30th to close out the week tomorrow on Friday. Going to go over the usual tickers, but I also got some on the list here, but it is a little bit shorter because, they've been running a little bit long the past couple days, and I haven't been getting enough sleep. And also, I did see Kevin B's request in the chat. I will open that up once I get through the list here. And so once I do get through the usual tickers, I do have added on here really just based on alerts, maybe some trades that I got going on, alerts that were hit today. And the first one is going to be USAR, which is rare earth materials. I believe that's what it is. Let's see. USA Rare Earth Incorporated, also looking at Moderna, ticker symbol mRNA, as well as Plug Power. Might have a trade set up on that. I'm curious about, just kind of as an experiment. Maybe it goes wrong, but I thought I'd share it with you guys. And then also on X, I did get a request for SoFi, so I'll be checking that out once, I make some progress with the video, and then I will, like I said, open up the chat there for me to see. But yeah, you guys can chat amongst yourselves as I go through the list here. But yeah, beginning with the UVIX, the 2x long VIX futures ETF, this did close down today at $28.86, down about 0.5%, but we are seeing it bouncing a little bit in the after hours and overnight. Currently, it's about $29.40, up nearly 2% from that close. So yeah, I mean, there's just a lot of stuff going on, whether it's the tariff news regarding the tariffs potentially from Liberation Day being illegal. There's going to be some battling around that, I imagine, or maybe specifying what the tariffs are. So we're seeing a little bit of a bounce in the markets, which corresponds with a pullback in the volatility, because if there's no tariffs, there's less volatility. But I think corresponding with Trump, the kind of president that he is, I think that we will see another spike. So I'm not too concerned about this. We did actually see a green candle on the day, even though it did close 15 cents lower than Wednesday's close, which was at 29.01. Let's see. I guess that's 15 cents lower there. And we did actually hit a low today, or maybe it was, let's flip over to the 10-minute time frame so we can see. I believe it hit 27. Let's see. Yeah, 26.50. So in the overnight from yesterday, we saw that low of 26.50. I had an alert at 27. I guess I mentioned that yesterday. At 27, that did go off, but then we bounced from there. And so I did not have a buy order placed at 27 because maybe it could go lower. I'm always surprised. Things always go lower and or higher than I expect. But that's, the nature of the markets. You're never going to time or buy the exact bottom. You're never going to time or sell the exact top. And so what I did, rather than place a buy order at 27, I placed a small one. I'm a pretty small time trader, very small buy order at 25. If this does pull back some, I'll be able to get my average down. If not, that's cool. I'm fine to just hang out. My position's small enough. I'm not anxious, but it's big enough that if this does rally, maybe up to 36, maybe up to fill this gap here around 38, or maybe even up to around $45, corresponding with the low that was hit on April 9th. So, any of those levels, if the volatility is going up, that means stocks and the general stock market is going down. And so holding the UVIX allows me to then take profits on this when everything else is at a discount. And then I can roll those profits, effectively having some cash on the side for discount days to then roll into other positions. So this is one I'm a fan of. I just wish it was. I think my average is around 32, just shy of 33. So maybe we see it actually, maybe we have a volatile weekend over last weekend. So Friday the 23rd, the UVIX closed up at 35.32. So I was in the green over here, but then it gapped down over the weekend. Maybe what we see from Friday into Monday next week, maybe we see a gap up. Who knows? So, I am happy with this, even though, it hasn't been as exceptional as it was more recently here when I happen to not be holding it. But, that's just the way it goes. And then, thinking about the UVIX, let's quickly look over at the VIX. This is the Market Volatility Index, ticker symbol VIX. And we can see that this did close down today about 0.67% versus the UVIX, which was down 0.52%. The VIX closed at 1918. No after hours trading on this or anything like that. No overnight, at least in the view that I'm looking at. You can look at futures and other ways to see where it's at, but I just don't have that up here. And we can see that the low for the day was 1811. I've talked about the possibility of this coming down to this level here, right around 18, being at 1791, corresponding with that 786, which is the retracement over here. So like the retracement for this maybe shoulder of what could end up being a head and shoulders pattern. And so maybe we come down to 18, but my thesis really is that since it's been tested multiple times, we might be breaking down lower. That's why I think the UVIX could come down to 25, maybe even lower. But looking at the VIX here, I could see it potentially coming down to right around 15, where I got that blue line there at 1485, which corresponds with the gap that was formed over here following January 24th. The close on that day was at 1485. And then the low the following day was 1757. So a gap was left there. And then the low from this pullback was, it looks like 1490. So 5-cent gap was left there. It was since filled. That's why it's a solid line, not a dashed line. But yeah, maybe we do return to that level. So always good to be prepared for the volatility to move to the downside. When it's boring, maybe that's a good time to be stacking for when we see a spike in volatility to roll into other positions. But the VIX is options. There are expirations dates with this, whereas the UVIX is not. So that's kind of why I prefer that. I know a lot of people refer to the VXX, which is a similar ETF, similar to the UVIX. I personally just like the UVIX. That's the one I've gotten familiar with. As you can see, I've kind of been tracking little ups and downs in it for quite some time, although I've kind of taken a break from that because generally, you can look at this and you can see following this massive move, accumulating at any point in time when it was in this parallel channel would have been profitable considering this move over here. And I guess I should note the amount of time it spent in that channel before breaking out was about 236 days. So it can be a very slow, very passive accumulation over time, trim on upside moves, nibble back in on downside moves. So yeah, I like the UVIX a lot just for hedging and whatnot. But then let's flip over to the next one on the list, which is of course going to be the SPY, which is the S&P 500 tracking ETF, closed on the day at a price of $590.05. being up 0.39% on the day, but pulling back about 0.21% into the overnight trading right around 589, or just a little bit lower than that. And so what we can see here, actually I had talked about this a while ago, this kind of rising wedge, thought it might be breaking down. We did see that, and now we are approximately following this doodle that I have over here. Maybe it's a bull flag with this being an upside move, consolidation here. But maybe it's just a breakdown and then a retest. Maybe we do go to above $600. Let's see, the high today was $593.20. If we get up to 600, that could be bumping into this trend line if I do extend it up a little bit. And, so then that could be a retest, but then rejection before this really does come down. So good to keep that in mind. And right here, I have that cursor at around $606. So, it could be hitting a new high relative to the high that was hit over here on May 19th, but still be bearish not being able to get above this uptrend, which is approximately drawn here just based on the low from April 7th, as well as the closing price from April 21st, just seeing that approximate line there. Yeah, it does look like we have, very clearly broken below that. Levels to the downside that we could go to if we do head down, which it does look like that's where we are going, but that could change, in a minute, who knows. We've got some gaps down here around 565, 555, and then one down here at 527. I don't necessarily think that we'd come all the way down here, but maybe we could fill the one around 564.34. Also corresponding with some fib levels here. The one going across this green line here, that is at 568.70. And let's see, there's another, we've got this yellow line here that does not correspond with that trend line. But yeah, I mean, that's right around that upper gap. And then the 382, so I was just talking about the 236 retracement. The 382 is around 552, just below that gap there. So that's kind of an interesting range from 570 down to 550. Maybe we see a pullback in the SPY in the S&P 500. But before I flip over to the actual index, let's just look over at the 10-minute time frame here to see how it traded in the overnight yesterday. We saw this big move up, and that was following the news that those tariffs may be illegal. And so we got a little bit of a pump there in the overnight, but then that faded, dropping down, basically bringing back all of those gains from that rally in the pre-market, and then during market hours hit a low of 586, bouncing a little bit, but then fading into the after hours and overnight trading. So, yeah, it will be very interesting to see where this ends the week. If it's above 600, I think that's maybe it's, exit liquidity at the top. Who knows? But maybe we are, not in a bear market as everybody was talking about over here. Maybe it's just a second wave of a bull market. So yeah, we'll have to keep an eye on that. Let's check out the close. I'll probably be doing it Sunday in all honesty, but just curious to keep an eye on that close for the SPY if it closes tomorrow above $600. But the one that's really important to pay attention to, because the SPY is the ETF that tracks the index. Let's look over at the SPX, which is the S&P 500 index. Closed on the day up about 0.4% versus that SPY, which was 0.39%. So very similar as you'd expect. The SPX closed at $5,912.17. No after hours trading with this one, no overnight, just like with the VIX. Although I could look at the futures, but we effectively get that by looking at the SPY, just like looking at the VIX, looking at the UVIX over there. And so what I would be, impressed with the SPX, with the S&P 500, if we see a close on Friday, closing out the week, closing out the month of May above at $6,000, I think that would be, a clear sign that, hey, we are back in business, even if it's not going to be at all-time highs, which was 6,147. And also thinking about that, thinking about this high with this high, currently we formed a lower high. What's going on with the RSI? I think that's key to pay attention to here. When we were hitting that all-time high back in February on the 19th, hit that high of $6,147.43. The RSI was 61.17. Whereas over here, forming that lower high, we're actually at 69.97, so just about 70. Getting into 70 is in that overbought territory, and so that suggests there could be a top. And also, with us seeing higher highs in the RSI versus the lower highs in the index price, that is hidden bearish divergence, whereas bearish divergence would be higher highs in the index or stock price, lower highs in the oscillator, which here is the RSI, the relative strength index. And so seeing that divergence, one being higher highs, the other being lower highs, the highs correspond with what is bearish. If it was higher lows and lower highs, in the price up here, that would then be bullish divergence, but we're not seeing that. So we are seeing some hidden bearish divergence. So maybe we do see a pullback, maybe to around 570, coming back to that 236, which if we're looking at the SPY, that would correspond with coming down to around 570 here. The SPX, that is around 5,700. So that's actually pretty easy to remember, 5.7 for either one. The SPX has 2 zeros, the SPY has 1. And then we also do have these gaps to the downside. I was just talking about them with the SPY. We got this gap here around $5,660, and this other one down here around 5,570, and then down here at 5,288. Personally, looking at this, I could see these top 2 gaps filled, but I doubt that we would come down here. And the reason why I could see the second gap being filled is because of this orange trend line that I have drawn there. And that goes back to, I believe, I want to say April 19th, but I'm probably wrong. Let's look, April 23rd. No, April 19th. I was right. And the other one, of course, is going to be August 5th. Markets bottomed then. We saw a very nice rally then. And with that, there was a lot of panic then. When there's panic in the streets, when there's blood in the streets, that is when you want to be buying. And this was a great opportunity down there. Even if you held through this pullback, still up a lot. Let's just see from that bottom to this bottom. 5%, 5.6%, it's a lot for this massive index. And going up to the high here, up 10%, up to the top, about 20%. So yeah, good to be keeping it cool when there's panic in the streets like there was over here. Now up from that low, over 20%. So yeah, but we could be hitting all new all-time highs. And so whether it's the, I think the SPY, if that's to close above 600, I think that'd be great. I think that'd be making some headlines. But really, I think if we're looking at the SPX or the S&P 500 index here, this closing above 6,000, I think that would, be a signal that we are back in business. So keep an eye on that for Friday. I definitely will. But this could be rolling over as the overnight trading for the SPY does seem like we are seeing a pullback. And speaking of pullbacks, let's look over at crypto here, looking at Bitcoin trading currently around $105,000 and $105,900, just shy of 106. And I have to say, in Crypto Corner Sat Stacker, I basically go over my thesis on 18 cryptocurrencies, including Bitcoin, including Ethereum. And I talked about a dip buy that I was going to place at around $105,000. Every day I do a daily dollar cost average, so nothing too crazy. I'm always just stacking. Takes the emotion out of it. That's what I like to do. I didn't want to put a ton into a dip buy because Bitcoin, for me, I try to view it as like a retirement fund, not like something I'm going to be cashing out at the end of the year or something. And so I didn't want to be too aggressive with the dip buy, but I did do a dip buy that's half of my daily DCA. Could have been more. But it did get filled at 105. So I'm super happy about that. And so what we can see based on the data here from Webull, the low for the day looks like it was 104,616.82. So $104,616.82. And so you might say, hey, you could have gotten it cheaper. Well, maybe, but the reality is what I've experienced is whatever the spread is, and with something that's valued at over $100,000, that spread can be pretty notable. It can be hundreds of dollars. So with that low being around, $104,600, I think I basically bought the dip there with that $105,000 limit buy. So I feel really happy about that. And it's up, but maybe we see it continue to roll over into tomorrow. The next level to the downside that I could see is around 103. I've heard people talking about 102, maybe 100,000, maybe getting into the 90s. But if it, let's say, goes down to 102, maybe it's tough to get a fill right at that price, so I don't have another limit dip buy placed or anything, but I could see 103 being the next level. But, really, why did I pick 105? Why did that one stand out to me? In all honesty, if you want to get the deep dive into it, check out Crypto Corner Sat Stacker from last Saturday. I will be doing another one of those this upcoming Saturday so you can get my updated perspective. But the reason why I thought that is because we've got these consolidation highs here, or really just like the wick highs over here. And so the consolidation highs, where those candles kind of top out at, that's around 104. And so considering spreads, considering I'm not going to pinpoint the bottom exactly, I'll just round that up to 105. That's effectively how I got that level, sweeping down to below that level, making people get all bearish, and then we see a little bit of a bounce. Maybe it's bounces through the weekend and we see new all-time highs getting back up to 112, or maybe we see this get back into, let's see, the 5 digits getting down to like 99,000 maybe. Who knows? Good to have a plan for that. Good to take advantage of dips when they happen, and good to get them on bounces like what I did. But it could be short-lived, so I'm not bragging. I'm just proud of myself. Let's now flip over to Ethereum. This is one that in Crypto Corner Sat Stacker, I also had a dip buy placed. I actually still have a dip buy placed because Ethereum's been holding up, in my view, better than Bitcoin. The highs for Ethereum over here have been right around 2,700. It actually looks like the high was hit yesterday around $2,789.80. When I put all the numbers in there, I get tongue-tied if I don't say 1,000 to kind of separate it. Yeah, so 2,700, almost 2,800, but not quite. And so really, it's just been hanging out right around 2,700. It's only $100 lower than that, about 5% lower. And I feel like Ethereum's been holding up really well. If it was to pull back like Bitcoin has, and maybe Bitcoin's the leader, Ethereum as an altcoin will follow, that's possible. My limit dip buy for Ethereum, you might be able to guess it, is right around this level here, 2,362.65, which is the, 382 Fibonacci retracement, going from the low over here of 1751.72 and then up to this high, which was the high for this cycle, hit on May 13th around 2,740.28. We actually hit slightly higher over here. So maybe I want to adjust that, not that one. Let's see, this yellow one here to the new high over there. So I'm just going to make sure that is to the exact level. We can see that number there. It does match the level marked there. And so that 382 is just shy of 2,400. But really, what you guys want to know, what's my dip buy level at? It's actually not at 2,400. That is what I was thinking about. But I just started to think about this low over here. So on May 15th, and maybe I could actually look over at it in TradingView. So May 18th, sorry if I said 15th, I meant May 18th. The low over here was 2,327, right around there. And so I'm thinking that maybe it could be coming down to 2,350. I believe I've got a limit dip buy there placed. And that's not for half a daily DCA stack like Bitcoin's dip buy was. That's for a weekly accumulation of 7 daily dip buys all at once at that level, because I think that if we do dip down to sub 2,400, or even if we just get to 2,400, I think that could be the bottom and that we could be bouncing. But let's look over here just at the ETH chart in TradingView just to see what that level was. So on the 18th was just talking about, that's the level here. Got that yellow line marked. It looks like the low was 2,323. So 2323, easy number to remember there with that repetition. Although it'd be really nice if it was 2323 and 23 cents, but whatever, I'll take it. And so just a little bit above that is 2,350, where I got that limit dip buy. But maybe I want to adjust it to 2,400. I don't know. I'm not going to adjust it. I'm going to chill. Maybe I'll adjust it come Saturday for Crypto Corner Sat Stacker. I had talked about I believe the bearish divergence, the hidden bearish divergence with the S&P 500, we can see something similar over here with ETH. We have definitely from over here, we have a higher high, and from over here, we have a higher high, but we went lower high or effectively kind of flat to a higher high. So generally, higher high bypassing this one or higher high with that one included. What we see in the RSI is lower highs. So that's bearish divergence. So maybe we do see a pullback. So yeah, I'm going to chill. I'm just going to wait for that limit dip buy to get filled or to reassess on Saturday, which I will be recording for Crypto Corner Sat Stacker. So make sure you check that out if you want more of my perspective on crypto and kind of, a window into what I'm doing, which is really just daily dollar cost averaging. So it's really not that exciting, but I think that's the way that you take advantage of these markets and get the emotion out of trading, just accumulating with a longer term thesis. But anyways, let's talk about some of the alerts that I got today. So the first one on the list is ticker symbol USAR, which is USA Rare Earth Incorporated. I had this alert here that, below $8. And so you might notice closed at 807, down over 3% on the day, and actually hit a low during market hours of $8. So very interesting to see that. And I have some lines drawn up here. I'm actually just going to pull up YouTube real quick just to see when I last went over. Let's see, US Rare Earth. So let's just scroll down here. These are just the videos, I believe. US Rare Earth. I went over it right over here about a month ago. And so when I went over that video has only gotten 33 views. In that video, I probably talked about placing this alert here at $8, and I included, all of this analysis. So from about a month ago, let's see, I'm actually just going to pull up the exact date. I'll do it on my phone so I can see it a little bit easier than if I pull it up on the screen, it might, the video might start playing. So I'm just going to scroll back a little bit in time to see when that video came out. It was a month ago, and the date was April 19th. So let's just go back in time from where we're currently at to April 19th. Actually, I don't need to have this measurement or anything. I can just go to the candles over here. So this candle here, this gap down, that was the 21st. That would have had to have been a Monday because we don't see the 19th on here. So from here, I made a video pointing out this gap. The trading day after that video came out, that gap got filled. So let's make that a solid line. And also I'm going to make it a little bit thinner so it's not too intense just because the chart gets a little bit cluttered. I did suggest that, this could be going back up, but ultimately I thought it would be going lower, following potentially below this trend line. We have seen that. I'm just going to remove the doodle because it didn't go up all the way to this red line here at $20, but I suggested that, it's a possibility. So anyways, let's delete that so we're not cluttering the chart. We do have, let's see, this Fibonacci extension from over here suggesting that this could have been the top. It's the 1618 extension. So it's 100% of this move plus 61.8% from here brings us to there. 1536. That might have seemed like, you could have sold higher at 18. Why would you sell at 15? But now looking at the price at 8, that was a good level. Although I did have this level up here around 20.37, the 2618. So maybe there was a little bit of greed there, but for me personally, I did not partake. And, with that doodle, I did suggest that price could be going lower, and that is what we have seen. So I'm just going to remove that extension because we don't really need it anymore. And then looking at this extension, which does go, or sorry, not extension, retracement. So an extension projects where it could go. A retracement identifies levels that it could find either as support or resistance as it pulls back to where it previously was, retracement. And so what we have here, I've got the 618 at 1052. Clearly, we're below that level. So maybe I'll remove that one. Let's see, just get that 618 off there. But we still have this 786 or the 78.6% retracement. And that is at, let's see, what level is that at? It's tough to read. $8.34. We've effectively pulled back to that level. So, a nice dip by there. And to kind of remove the clutter, because we got a lot of stuff here, I do have this yellow line here. I'm just going to delete that. And really, when I was drawing this up, I need to talk about what those colors mean. Red up here at 20. If price were to have gotten up to that level, that is a clear take profit level in my view. We didn't get there, so I'm actually just going to leave it there. If it goes back up to 20, might be a good take profit level. And this orange one, that's, hey, we might pull back to that level, but I wouldn't necessarily want to be buying there because it could be going lower. So we've got that orange line there. Just going to make the line a little bit thinner. And then now we're right around that yellow line that's marked at 850. And that's kind of, maybe this is a good level to buy at, but maybe not, because maybe it could still go lower. And so my thought process on that is we do have this consolidation over here. Maybe that's going to act as support. We also have this gap here. The close on April 11th was at a price of $8.31. We've since filled that gap, so I'm going to fill that line over here. And actually, I'm going to delete this gap up here because that's gone. And since we have filled this gap and we got other levels marking it, I'm going to delete that blue line as well, just to kind of get that clutter off the chart there. And yeah, we got this consolidation here. That could potentially be acting as support. There were buyers here. There might be some buyers in this range. But if we do go lower, I see this green line here. That's 709, corresponding with, let's see, the high on April 1st was 710. The high on March 26th was 709. So that's where that line comes from. And below that, we see some consolidation. There were buyers there. That was the bottom following this rally. There might be buyers there again. We also have this gap with the close on April 3rd being at a price of 650. So I think, getting towards 7, that is definitely, buy the dip territory as long as it doesn't break below these lows. 556 was the low over here, because then, you got to reevaluate the chart. If the thesis has broken down from putting in higher lows relative to this one, if you change that, you start going lower, it's tough to say. But yeah, with this 786 retracement, I think this could be a nice time to start adding. Definitely better than over here when I made that last video. Do I have a position in it? No. Do I plan to get into a position? No, not really. I am intrigued, but maybe I'd want to take a step back. This is a fairly newly listed stock, so there's not much data on it. So a little risky in that sense. The all-time low is the 52-week low because it's newly listed. That's at 556, as I was just talking about. But what I'd like to do is look at some options data, but not in the tables over here. I'd like to pull up the options data from Unusual Whale so we can see the flow, see what's going on over there to get an idea of, hey, is there bullish sentiment or not so much? Is there bullish activity or not so much? And so we can do that by just coming over here to, let's see, select filter. This is from the flow filter. So I guess if I go back the way that I got to this, Unusual Whales, flow data here, and then flow feed. Nothing is in there. I'm just going to type in USAR so we can search that. And so there's not too much data here for today. I do have a premium minimum of, let's see, $25,000. And so we do see one order, which was actually a put for today. Other than that, nothing for today. Did have a couple orders, also puts from yesterday, and same with Thursday, 4 put orders. But I don't really care about the individual contracts. What I want to look at is the net call and put premium, so the data over here. So I'm just going to expand that so we can see it on the full screen here. And what we can see is we see net call premium. We want to see that be a really big number, not thousands of dollars, not $10,000. We want to see hundreds, if not, millions of dollars, hundreds of thousands to millions of dollars. And what we see is a net call premium increase of less than $15,000. So that's nothing to be standing out there. Looking at net put premium, though, we see just shy of $100,000 increase. That's the red line going up here. So that makes me think that this is more bearish than bullish, that the bottom is actually probably not in it, and maybe we do actually come down to $7 a share. If we do look at the bear bull slider here, just to kind of give a visual representation of just what I just went over, that there was more money being put into puts than calls. That suggests bearish. What we see on the bear bull slider is 63% on the bearish side versus the remainder of that is either neutral and white there or green bullish there. So I don't think it's time to buy this one just yet, or maybe this has taken profits following some recent rally. But if we look over the past 3 days, we actually saw put premium going up. Stock price did, it's really just been pulling back the past few days. And if we look over the past 30 days, we can see there was some net call premium spiking up to the hundreds of thousands over here on, let's see, April 30th. Net call premium increased by $425,000, so a lot there. And on that day, the net put premium decreased by about $150,000. And following that, we can see in yellow the stock price. Following that day, there was a short-term rally. So that would have been a good time, a good day to buy calls, but then sell them 1 or 2 days later for a quick profit before the stock price does go down. So when trading options, very, very risky. And I forgot, that was kind of the theme of this video, FAFO, FOMO. So F around find out, and fear of missing out. Both of those things are bad. And I think that what we've seen in some of the stocks like AMC, GameStop, also Unity Software pulling back, also Bitcoin, things are, at all-time highs or having recently rallied. We start to see a pullback. There's a lot of, buying here, a lot of sentiment. That rally is short-lived, and then the stock price here for USAR is lower now. So good to be in and out, not to be chasing. We're in a volatile market. And so I wanted to look at this data to put into perspective what's going on with the chart here. And that data makes me think that, this yellow caution line at 850, good to be cautious, not good to be buying, even though it's a discount from 15. It could be greater discount. So $7, we'll have to check that out, the stock out then, if it does come below 7. So I'll just adjust the alert to down there, and then we will revisit. And maybe on that day, we also fill this gap and maybe start to see some bullish data start to show up. So we will have to revisit that. Another one that's actually pretty interesting, I've been keeping my eye on this. Mr. Chart Norris has posted about it, and I kind of just looked at the chart here. For me personally, I don't want to spread myself too thin, so I'm not in on this one. Also, it's maybe a little bit, not necessarily controversial, but risky in the sense that it's a biopharmaceutical vaccine corporation, or that, we all know them from the COVID vaccine. So this is Moderna, ticker symbol mRNA, closed on the day at a price of $26.93. I've been getting some alerts here. You can see my little alert bell there at $26. And that's been going off quite recently. I do have this downtrend. I feel like I probably got this from Mr. Chart Norris, so just to give him a shout out, Mr. Chart Norris on X. And we see this downtrend here, resistance. We've broken out from that, and following that breakout, we did get a little bit of a pullback, but really we've seen some consolidation. And with that consolidation, volumes cooled off a little bit. So that does make me think this could be a bull flag, that this could be breaking out. But today, we got some interesting news. I think it should be over here. So from 11 hours ago from the NASDAQ, it says the U.S. government, I'm just going to read the headline, but the U.S. government cancels $766 million funding contract for Moderna's bird flu shot. So, hey, cancellation of $750 million, stock's going to take a hit. And if we look at the 10-minute time frame, about 11 hours ago, that's when, my alert was going off. We saw, at market open, a low of 25.76, 26 alert going off. And then following that, it bounced. And the reason for that is because the MAHA report, so MAHA, if you're not aware, is Make America Healthy Again. It is what RFK, Robert F. Kennedy Jr., campaigned on for, Trump Health Administration, or administrator, I'm not exactly sure of his title, but he started campaigning on MAHA to be a part of Trump's administration to make America healthy again. But there is actually some critique of that report, it being under attack for alleged fake sources. If you know RFK's history, that may not be surprising, especially regarding vaccines and stuff. So maybe there was some assumptions made with that, and maybe the ruling or the decision to cancel that funding is going to be maybe brought to court. Maybe Moderna is able to secure that funding if it is based on false allegations. And interpretations as reported here. So following that kind of like bad news, there was some follow-up news that, hey, that's fake news, or it's based on fake news, and Moderna started to rally. And so this one, I think it's just like a little bit risky because it's biopharmaceutical, vaccine stuff, also, political stuff. So I'm not in it, but I have to say, I'm pretty intrigued by this downtrend that we've broken out from bull flag, and maybe this does continue to the upside. And I might actually just pull up Mr. Chart Norris's profile over here. Ooh, I've already searched it there, Moderna. And so this, let's go to the latest, what he's posted most recently on May 20th, so 9 days ago. Mr. Chart Norris is saying, don't forget there is only one Mr. Chart. But again, as an alert seeker, you won't get me, Moderna. And so, let's see, I have something similar. This is something that he drew on February 27th. So I probably, in all honesty, just kind of inspired by his chart. I didn't do the trend line here on mine, but going back to, and I think I go back a little bit further. So this is the 1 month chart. So his is different than mine. I'm just looking at the daily. This is going back to the high from 2021. So if I go back to the high from 2021, man, let's see. I'm just going to remove my drawing so we don't have the clutter, and let's put this on the 1 month time frame. So, high from 2021. That's what he's got. So he's got a trend line from here down to here. I'd probably have to adjust the y-axis to be on the log scale to fit all of this into frame. Actually, no, that doesn't work. Surprised. I would have expected that to be on the log scale. So put that back on the linear, and what he sees is, this downtrend, but it's on the monthly time frame. It's going to take some time to break out. But what I see on the shorter term, the daily time frame, is, as I just mentioned, this downtrend, which we've had some, kind of fake out, breakout, so it's not been respected perfectly, but generally we see a trend of price not spending much time above there and it getting rejected every time it approaches or goes above that level, that trend line. But we are now above it. We've broken out, maybe a bull flag, maybe this goes higher. But like I said, I'm not in it, not planning on getting into it, but I am intrigued by it. Oh, and I think, I started talking about USAR, but I wanted to look at the data here. Moderna, this is a contract that I was considering, and actually, now that I'm talking about it, this is kind of why I do videos like this, streams like this, is because it helps me to think about my process. This is a contract that I'm intrigued by. This is a $50 strike call that expires in January, so about 230 days between now and expiration. So plenty of time to be wrong, to be early, to be right, and to take some profits sooner rather than later, so not risking holding this to expiration. I like the longer expirations. And so why would I pick $55? Let's see. We got a high over here from January earlier this year of 49 bucks, basically 48.92. Got this orange line here, kind of these highs here. That's around 55 bucks. So yeah, let's just go with that. The line going back there, that trend line. Do you have this orange line here? I guess that's the low from February 2nd of 2023. That line is just not matched up with that point, probably because I switched time frames to monthly. But yeah, that's at 62.55. So I think that this could be heading back at least towards $55. So that's why I picked that strike. And then, over 200 days between now and expiration. So that's kind of a safer bet. So actually, personally, I'm a little bit more intrigued about, getting a call than I am in getting shares. Calls have expirations, but what would one be risking in this contract? So the low for today was 118, so $1.18. That's 100 shares per contract, so 118 times 100, that is $118 per contract. For the low today, but that's actually the low, high, and the average. It looks like there was just this one candle here, candle premium of $1,180. So it's really not that exceptional. And whether that's Moderna itself or just this specific contract, I tend to gravitate towards contracts that aren't necessarily that interesting because they're cheaper and they're further out. And very far out of the money because I got that window of time, that buffer between now and expiration. But the low from yesterday on the 28th was 104. So could have gotten a contract then for a little bit cheaper than today. But what I see, just like we looked over at MSAR, let's look at the net call and put premium here for Moderna. What I like about this is we see the stock price in yellow going up. We also see the net call premium in green going up, ending the day with a net call premium increase of $381,000. So that's good. That's nearly $400,000, getting close to $500,000 going into, going long on Moderna. Whereas the net put premium actually went down by $121,000. That is the red line here. But at the same time, maybe some of these calls were selling covered calls, so maybe that's still bearish. If we look at the bear bull slider, the majority of it is actually on the neutral side. It's 97% with a little bit bearish, a little bit bullish, and that's just going to be depending on what those fills were at, whether they were on the bid or the ask. But generally, with the net call premium increasing, being positive and notably higher than the negative net put premium, this makes me think this is more on the bullish side. We look back the past 3 days, what can we see? Kind of a lot of noise, red and green going up and down, not a clear signal, so I'm less compelled by this. But if we do look over the past 30 days, let's see. Yeah, nothing really stands out. I would say the thing that stands out the most is this net put premium, which spiked up super high. 9.43 million net put premium going up. But then following that, what do we see in the stock price in yellow? It went up. So that was a bad move. But maybe those were cash secured puts. So people saying, if it's going lower, I'll buy more. But if it's going higher, I'll collect that premium. That's effectively what a cash secured put does. So yeah, I'm kind of intrigued by Moderna, not necessarily to get shares, but maybe I'd consider a limit buy for one of these contracts, maybe just for tomorrow, just to experiment with it for $1. If it pulls back, hey, I got a discount. If it doesn't, I missed it, and that's fine too. Don't want to be chasing. But yeah, I find that to be interesting. And then the next one, I'm intrigued by this one. I've kind of talked about it in relation to ChargePoint, but this is Plug Power. And so I'm really just going to remove my drawings because they don't matter for this analysis. But Plug Power, ticker symbol PLUG, closed on the day at a price of 92.64 cents, actually being red on the day. Kind of surprising because what happened today? We hit a high of 103, going above $1. And I talked about this regarding ChargePoint, that I feel that once these stocks start trading sub $1, because this one's listed on the NASDAQ. I believe ChargePoint is listed on the New York Stock Exchange. They have requirements, compliancy requirements. In order to maintain compliance, they have to maintain a closing bid price above $1 a share for 30 consecutive days. And Plug clearly has not done that, having been trading below $1. Same with ChargePoint. But what happened at the end of April? You might be able to see it in the chart. It kind of looks like what we just experienced. The color is a little bit different. But what we saw at the end of April, on April 28th, just about exactly a month ago, we saw price actually taking a step back on April 25th. We saw a closing price at 81.16 cents. Hey, that's below $1. Maybe they're going to get a non-compliance notice. This seems a little sketchy. It is the end of the month. We really want to see the monthly close. If we look at the monthly candles, let's do that. Last month, what was the close at? Actually, 87.26 cents. Not above $1, but wait, I thought I was just talking about at the end of April, we closed. We went up. Wait, where am I looking at? Over here. We closed above $1. We closed at 102, having hit a high of 119. But what did we close the month at? Because following that day, we put in a bearish engulfing candle, fully engulfing the open and close of the previous day's trading, closing on that day on April 29th at 95.92 cents. And then we closed the month, closing on April 30th at a price of 87.26 cents. So I feel that this massive move up was a way to create exit liquidity for retail traders who are long Plug, saying, hey, it's above $1. This is bullish. Hey, we closed above $1. This is bullish. Whereas in fact, we actually put in a topping tail, this massive wick to the upside, closing in the bottom quarter of trading for that day. Following this gap up, there wasn't enough to hold it up. And then we clearly saw that with this rejection, this bearish engulfing candle the following day. And so anybody who is chasing this, buying at or above $1 share, is in the red. Fast forward to today and yesterday, what do we see? We saw Plug Power yesterday open at a price of 79.07 cents and hit a high of 95 cents. Closing at 92.65 cents. We closed 1 cent lower than that today, but hit a high on the day of 103. And so I think that created some exit liquidity of people saying, hey, we hit $1 last month. This is the time. Now we're going to break out. And so I think that created some exit liquidity, and this is going to be pulling back. I think that it will be closing the month, which would be closing tomorrow, closing the week and the month below $1. And so because of that, I didn't open up a big position, but I was intrigued by a specific contract. You might guess what kind of contract it is. I'm just going to pull up the contract list over here. Plug Power. I opened up a put. Maybe it's a bad idea. I kind of regret not doing a 50-cent strike, but what I did is you can see it right over here. $1 strike. That expires. Here, maybe I can just do it here. So yeah, Plug Power, $1 strike that expires in January. So just to put, I bought one contract at 39 cents. The low for the day was 38 cents. And so that means I'm risking $39 because I bought one contract. 39 cents times 100 is $39. I do have another buy order for another contract at 35 cents. Maybe I'll leave it, maybe I won't. But my thesis is I could get a 20% swing on this. The high over here on May 16th was 50 cents. And so to get that 20% swing, going from 39, going from 40, that'd be 48 cents. So going from 39 to 20%, that's about 47 cents. So yeah, I mean, maybe I'll get a nice little swing there, make $8. Nothing too crazy, but just kind of experimenting with the thesis that this over here is just creating a exit liquidity towards the end of the month with retail traders thinking, yeah, above $1 before the end of the month, it's squeezing, it's going to the moon. And then they get rugged. People FOMOing into this above $1 and then getting rugged. But at the same time, I may very well be wrong and I may lose money on that contract. If I buy another one, I may lose a little bit more money in total. That would be putting me, I'm not going to do mental math on the spot, but I'll pull up the calculator here. So we can see I got 39 on it now. If I add at 35, that'd mean I'm risking 74 bucks. Maybe it goes to zero, maybe it doesn't. I don't know, but I just thought, I'd kind of experiment with this little thesis that I have, that it's going to be getting rejected from there. And even if it just pulls back to this trend line, I mean, that'd actually be a good thing to find that trend line then as support and then bounce higher. If that does happen, maybe I'd want to be exiting that put. Maybe I don't make 20%. Maybe I just make 10% or 5% or $1. Doesn't really matter. Just kind of experimenting as always. And then the last one on the list, which was requested on X. And I think the funny thing about the lists that I put together here, doesn't matter how many tickers are on them. I'm just going to ramble on to fill up the entire hour. Got 5 minutes left, and I will open up the chat once I'm done going over SoFi. But yeah, I mean, I got some history with SoFi. In all honesty, I was making videos on it leading up to this dip over here at 601. There was a gap going back in time at 603. That gap got filled. But I was stubborn. You can be greedy both to the upside and the downside. It doesn't really matter. There are definitely different ways to be greedy. And so with this, I effed around, and I said, hey, that gap down here at $5.41 has not been filled. So I'm going to be stubborn, and I'm going to wait for that. I'm going to be greedy, and I'm going to get the absolute best discount rather than buying when that first gap was filled. And so what happened following that, I dug my heels into the ground. I said, I'm going to wait for at least 50. That never happened. This rallied up, and I kind of stopped covering it because I just recognized, hey, I was pretty convicted in this coming down lower, and I was wrong. And now I got a little chip on my shoulder. I'm going to be thinking about this emotionally, like I'm going to want it to come down. I need to just walk away from it. And, so what we can see here, we do have the 1618 up there in extension. Let's see where that's from. It's actually tough to fit on the screen here. So that's from the lows of 424 going back to the end of 2022 and going up to this high over here, the end of July 2023. That was at a price of around almost 12 bucks, 11.70, and then pulling back to that low of 601. Man, I missed the bottom. So from 601 up to 1808, actually the high was 1842, but that 1618 at 1808 really marked the top very nicely. And what's 18 divided by 6? I guess I should put it that way. It's 3. So that's a 3x move. I missed out on it. That's fine. Don't get emotional about it. Don't chase all of that stuff. But what happened following it? I got this yellow Fibonacci retracement over here. And the 786 on that is at 867. All right. There was also a gap fill just above that. You can see that solid blue line. I'm just going to make it a little bit thinner so it's not so overwhelming to look at. Lots of clutter here if I don't. And so that was at a price of 901, right around $9. But then it's like, but hey, we got these other gaps to the downside. I'm going to doodle this out. I think that second gap could be filled. Did I learn my lesson? No, I effed around again. And I'm going to find out again. I'm finding out again here. That was a great dip buying opportunity when that 786 was tested at 867. You wouldn't have bought the exact bottom, which was 860. But that's 7 cents off. That's pretty good. Or at 901, that gap fill. Sure, you missed it by 41 cents, the bottom. But that's a pretty nice, level. If you would have bought at 901, even now, it's up 50%. So, yeah. Too bad for me. I missed that. This doodle up here didn't really play out with this dip, but to the upside, it did. But yeah, let's think about where this could be going because I've been wrong. maybe I'm going to be wrong again. I'm most certainly going to be wrong again, but maybe with the time I'm right, maybe with the direction I'm right, but the time I'm wrong. Who knows? Anyways, we got this gap up here because we closed on April 2nd at a price of 12.31, then gap down. But we have since filled that gap, so I might leave that line up there, but I'm going to fill it, make it thinner, because maybe we got some confluence over here around 12.31. That was that gap level. And we also see this support over here, and we do see higher lows being formed. So low here, higher low, and again, a higher low over here. So that's looking good, but maybe it's starting to roll over. Maybe it's going to break down. What we can also see is we do have higher highs being formed here. So what's that kind of forming though? Let's doodle this out or draw this out. Maybe there's a little bit of a trend line there that's been acting as support. Maybe if I adjust this to over here, I can move this pivot point to over here. Maybe there's something there. I'm not really sure. Maybe. Or drag this down a little bit. Maybe something like that. Okay. And then we can do something like that to the upside with these higher lows. Ooh, this is actually kind of interesting. I'm getting intrigued. We have these higher lows here, and I'm actually going to go to the opens, so not to the wick highs, because, I don't need to be super precise with those. This gives us some wiggle room that, the levels could go higher than this. But yeah, this raises some concern to me because it looks like it's a little bit of a rising wedge, which might tend to break to the downside. Although, if we do look at the highs here, we do see higher highs in the stock price, which correspond with higher highs in the RSI. In the RSI, the high over here was at 67.02, so not yet above 70. So it's not in the overbought territory. And with this, we have seen a little bit of a cool off in the RSI. Now we're on 51.81. So yeah, I think that what we could see is maybe a bounce up to this level. Maybe if we break above, we then do something like that. So I think that this actually looks pretty good. I would lean more to that side. Ooh, I didn't want that. But yeah, I will color this line up here rather than leave it white. Not sure what that means. I'm going to color it reds. That would suggest there's some resistance up there. And this line, I'm going to color it green to suggest maybe that's dip buying. But there's something that stands out to me. I could adjust this level. So I'm actually just going to move this pivot. Oops, not that one. I'm going to move this green pivot line just to over here so I can kind of show you what I'm thinking, and I will adjust it. But rather than being from the lows over here, which don't really get tested over here, I'm actually going to move this maybe to the lows over here, because then what we see is we did get a little bit of a test of that here as support, but before breaking down, bouncing, getting rejected from that level again, pulling back, making me think, it got rejected. This is not looking so strong. But then we do get a move up, get rejected from that red line, pull back, find that green line as support again, up again, rejected, back at that green line. So I can extend this line. Maybe I want to adjust it a little bit. Being approximate, not trying to be perfect here. Sorry, I just bumped the mic with my hand. But yeah, so maybe that's a little bit of a tightening rising wedge, which could actually be bearish. So good to be cautious of that. But yeah, I think that there's a potential swing with this, and maybe we could do a risk to reward type of scenario here. Let's see. How do we do that? Fixed range long position. So maybe at 13.17, that's the close for the day. I forgot to mention it. This is SoFi on the daily. So we got 1370. Maybe the risk level that I want to have is if this comes down to, let's see, we got this blue line here at 1231. That is this gap that was previously filled. I think this could actually pull down to that level, find it as support. So maybe let's adjust the bottom to be at stop level at 12. So let's make that at 12. And so that's kind of what we would see. And that would be risking if buying at the closing price of 317. And I don't plan on doing this. I'm just putting this up here as a little exercise. So that's an 8.8% risk to the downside. And then let's see what is the upside potential. So getting to that trend line here, that would be getting to around 1470. Let's have fun with it. 1469. And so that is saying share size price. How many shares would I hypothetically, I don't want to, but maybe hypothetically, let's just see. What's $100 divided by 13? Hypothetically, let's say 8 shares. So not a lot, not a lot. It's $100. Or, maybe let's have some fun with it, $500. Okay, I'm not planning on doing this, but let's just have fun with it. 500 divided by 13, 38.5. So let's say 40 shares. Hey, that makes sense here. Let's just go with it. Let's go with the flow. And so that would then be risking, let's see, 40 times 13.17, $526.80. Just hypothetically, I'm not doing it, just an exercise. And let's see, what will we be risking? Let's say we go long $526. We got that stop loss. How much do we want to take off the table at that stop loss to then lower the risk, and then we could maybe reevaluate? Because maybe if it comes down to 12, maybe then it's like, well, buy back at like 1142. I got that level marked there corresponding with the consolidation highs here. Or maybe buy back at 11, something like that. So, something to consider. So maybe we sell, hypothetically, 50% of that position at 12 to then buy back those 20 shares at 11. Okay, so that's kind of a hypothetical thing. So what's the risk to reward? I don't think that this is necessarily the best setup, but it's an 8.88% risk to the downside, and that would be selling 20 shares down there. But if it goes up, that will be a reward potential of about 11.54%. So, the risk is better in the favor. The risk-reward ratio, or the risk ratio, is 1.3. Really, I think you'd want that to be like a 2 for this to actually be, a better trade. But, yeah, but then that could be like, you got 40 shares. You got a stop loss for 20 of those shares at $12 to then buy back 20 shares at $11 if it comes down to 11. And then, could get the average down, and then it goes up. And then if it goes up to the target up here, 1469, sell 20 shares and let the other 20 ride, maybe come up to this doodle top here around 1576. Make an extra $20 on that. So, yeah, I don't know. That's something to think about. I think it's good to kind of play with those risk to reward things. This one doesn't really seem like it's set up that well. Oh, but the thing that is intriguing about this, I almost forgot about. Maybe you guys can see it here. What does this kind of look like? Maybe this is the left shoulder. Maybe this is the head. And maybe this is a right shoulder. And now we're forming like a little bit of a W. And so that could actually be kind of bullish. And so what we're seeing, what we want to be seeing with these moves is we want to see increasing volume when we get up to this level. And so we saw that here for sure. But that was actually with the selling. It pulled back. And then over here, volume's not as high. So this doesn't actually seem that strong. But maybe it's an inverse head and shoulders. We just saw a rejection there, just pulling back here to that support line, and then it goes higher. So I have no idea. But yeah, it's an interesting chart. It's fun to kind of game it out. But yeah, not in it. Don't plan on getting into it. Just fun to go over. So thank you for the request, Alex. Fun to go over. And then I'm just going to pull up the chat to check out. Man, lots of people requesting. So Kevin B has some. So I'm just going to add them to my list here, and I'll put them up to the chart. And I'm going to try to go through everything that's requested here kind of quickly, and I'll go through everybody's comments before I start going over the list. So I've got HOVR. INDI from Kevin B. And Saul, good evening to you all, everybody. I will also go over APLD for Saul and QBTS. I have not been following those quantum stocks. I know they were ripping recently. I feel like maybe they've pulled back some. So maybe a little bit risky there. And Sean is then saying, I'll watch more if you analyze more ETFs, please. Let me know which ETFs you're interested in. QTUM, that's another one to add to the list, which I assume maybe relates to QBTS. Shake my head. What's that? I'm just kidding. That's semiconductors. Yeah, happy to. I try to kind of rotate between sectors and or ETFs. Doing the VIX, the S&P 500 crypto, because those are ones I like to look at. I don't necessarily like to trade, but then, Bitcoin and Ethereum, I like to trade those or accumulate those, I should say, for the time being. And then I've done some gold, some natural gas, uranium, semiconductors would be happy to go over. I'd also encourage you, if you are interested in ETFs and commodities, I'd strongly encourage you to check out Gareth Solway's channel, which, I'm going to have a bunch of crap up here. But let's see. Gareth Solway's channel, this game plan, he does a live stream every morning, half an hour before open, and he goes over not only the S&P 500, stuff like that. So mine kind of, I've taken a lot of inspiration from his videos, his channel. That's Gareth Solway, or his channel is Verified Investing. You get the same content. Verified Investing, you get a little bit more. I like to filter it out, so I just look at this over here, his personal channel. And yeah, he'll go over commodities, he'll go over the stock market, he'll go up over the DXY, and also go over some stocks. So I would definitely encourage following that if you want some perspective on commodities, on ETFs. And he's definitely, a professional trader. I'm not. I'm learning as I go. So I would definitely encourage checking that out if you want more of that kind of coverage. But yeah, SMH, I will add it. Anon is asking about ChargePoint. And he is saying in the comments there, has ChargePoint got a delisting notice from NASDAQ? Will they do a reverse split? So they've got a non-compliance notice, I believe, February 19th on their chart. I extended that out, I believe, 6 months, February to August 19th, 6 months from February 19th. That is when they have to regain compliance. Otherwise, they could be delisted. And so I have some concerns, some notable concerns about a reverse split. I've seen it before, and maybe I'm wrong. Maybe it doesn't happen again. Just because it happened once doesn't mean it's going to happen again. But, I've held a number of stocks to becoming effectively delisted, effectively going to zero. Fisker is one that comes to mind, also Biora. I got out of Biora a little bit sooner than I did with Fisker because I had learned a hard lesson there. There have been some others. And so it's not that I don't believe in this sector. It's just that in that sector, I have a lot of conviction and confidence in Tesla. So I've tried to, migrate some of those funds over to Tesla or just to the side so I have a little bit more flexibility. But yeah, I have some concerns about a reverse split for ChargePoint, but they have not announced that yet. They do have earnings coming up, but maybe I will. I'll go through the list here. And then Saul says, ChargePoint received my, So in February 19th, exactly right. Yep. Glad you guys are communicating with each other in the chat there. But yeah, I'll start pulling up the stuff on the list here, and I might just do it in the TRL list, which is short for Ticker Request Live. I will be doing a Ticker Request Live this Sunday because I'm not working Monday morning. I'll be doing pre-market prep. So yeah, I'll do HOVR, New Horizon Aircraft. Then I've got INDI, which is INDI Semiconductor, which relates nicely to SMH. So I might add SMH as the number 3 on this list. Sorry to hijack the next one, which would then be bumped to number 4, which is Applied Digital. Then I will do QBTS, which is D-Wave Quantum. Then let's see, what is QTUM Defiance Quantum ETF, so that's cool. Can kind of compare that with what's going on with QBTS. And then ChargePoint, so I'll go over that at the very end. And then I'm not going to take any more requests. I'll go over all of these, but I'm already past my bedtime. Got to be up. I haven't been getting enough sleep. I've been crashing each day. I don't like to take naps because it destroys my productivity. I had to take one today, though. Then it's like you hate getting up from a nap. I just hate naps. But yeah, let's anyways go over HOVR, ticker symbol HOVR, which is New Horizon Aircraft, closed on the day at a price of $1.10, up 12.36%. This, if you know me, I tend to get a little bit nervous when stuff goes up this much. So 12% on the day, that's not excessive. But you look back over the past like 3 weeks, this is up, let's see, from the lows over here, it's up over 100%. So, and also I posted to the channel something related to this. Let's see, I'm going to go back over here to the channel, to the posts. I posted this one. 2 people liked it. Thanks for liking it. Got a couple comments on it, so that's cool. I got to check those out. But yeah, Finger got much higher than, oh yeah, one of those comments is mine. I did respond, so that's good. But Finger didn't go much higher than 5 and just crossed 3, almost like somebody said that happened. And so me taking risk off the table, I've got this doodle here. I was suggesting it could go to 3 over here, but then it did go up to 5. I was wrong then. But, with it being up at 5, if one had bought here or, trimmed here, definitely a good idea to take profits at 5. That's a great move from 4 to 5 or whatever. And I had this alert here at $3. It pulled back and then closed the day actually lower than $3. And so with that being said, that kind of reminds me of what we're talking about over here. Could this go up to the high here of 163? Yes, it most definitely could, but you're just getting into riskier and riskier territory. So I'd be a little bit cautious of that. And one thing that doesn't give me so much confidence with this is, what do we have here in the stock price? We have a lower high, and it's a little bit subtle, but what do we have? The RSI over here was at 80.97. What do we have over here? Not lined up exactly. 83.56. So it's approximately flat. It's not exactly flat, but with this being lower highs and that RSI getting up there, starting to look like there could be some hidden weak bearish divergence here. But if the RSI spikes above, what is that? What did I say? 84, somewhere around there. It could be getting into some resistance. But so let's look at this. Let's actually, this could actually be, though, it's ugly and I'm not really buying it. But let's see, I'm just going to draw one pivot point over here, another pivot point here. So we've got that. Yeah, it's pretty ugly because to get to that neckline, price would have to get up to like $2 if this is an inverse head and shoulders, which is valid because we do have, the lower low here, higher low over here for that shoulder. Otherwise, you can't bring your shoulder up higher than your head. So that would not be valid. But yeah, I don't necessarily think this is going to go up to 2. It could. I think it's too risky. What we can see, maybe this lines up. If I do just a horizontal line going from the lows over here, maybe the consolidation lows, we see that level. And by consolidation lows, I mean not the exact wick low, but just we got, some overlap between multiple candles, being approximate, not exact. It's at 117. And so that was support over here, but with price now still being below it, that might be a level to be cautious around. Not necessarily to be red, but over here, it dipped below it, bounced, got rejected. Over here, nearly got to that level, got rejected. Over here, wicked above that level, got rejected. Over here, had multiple closes above that level, got to that trend line, got rejected. And then over here, we're back at that level. So could it go higher? Yes. But there has been a history of that level acting as resistance. So at least maybe it's good. Let's say if you bought down here and you're up 100%, let's say, maybe it's good to take half off the table so that let's say I bought, let's say I risked $1,000 down here. It's doubled, let's say. So my position's now worth $2,000. Maybe it's a good idea to take $1,000 out. So some of that's profit, but effectively I got zero risk now because I took all that money that I put in out, still holding half a position, $1,000 in it. And maybe that goes up to 2. I turn that 1,000 into 2,000. I net 3,000 on this, or I net 2,000 on this trade, given that I put in 1,000. I've taken out 1,000, and then that remaining 1,000 goes up to 2, take profits, and I'm happy. Or maybe this pulls back. And even if it pulls back, comes back 50%, still I put in 1,000 and then I could take out 500. So still it's a profitable trade. So if one is up considerably on this, I would take some risk off the table. If one wants to enter this, I think that's gambling. And I think that you're going to quite likely lose some money. But I think this could go higher. In the after hours, it went up to 112, which is about a 2% move to the upside. But yeah, I think this is at a level that it's good to be cautious at. Maybe it goes higher. Maybe it goes up to 2. But maybe it comes back down to 40 cents. So good to be cautious there. Let's look over the next one, which is going to be INDI, which is the INDI Semiconductor Incorporated. It looks like this is a business, not an ETF. I will go over the SMH after this. But INDI did close on the day at $2.84, down 0.35%. So not too bad. Putting in higher highs here, also higher lows. So this is maybe doing somewhat of a, like a broadening wedge or maybe like a megaphone type pattern. I don't know. It's not really broadening that much. It's really just kind of like a channel. So from here, given that what I just doodled up there, I'm going to make this top line red and this bottom line green. And so if that's to symbolize green means go, that means buy. What does red mean? Red means that maybe it's good to take some profits. And so we're effectively at the red line there. So I could see this rejecting, pulling back to that green line, and then maybe just doing this. So maybe this is one to swing for a little while until it fails. And maybe if this does pull back, maybe it fails and breaks down. And so maybe the lows over here, that would be like a good stop loss level. Let's do the consolidation lows, or you could do the lows there. I don't know. That's around $2.32. And yeah, so maybe this is a good time to sell. Maybe this is a good level to buy, which if one was to buy at 255, let's say, we can do, because I don't do this very often, go there, adjust this to that low there, right? Just being approximate. And then the upside potential from there, as I have doodled it, is up to there. And so that would suggest that there's a 9% risk to the downside versus a 36% potential to the upside. So that risk ratio is 4. So that's pretty good. And so, yeah, I don't think that it's a good time to get into INDI now, although it could be breaking out. And then, I'm wrong. But as far as managing risk with the trade, I think it's probably good to wait for this to come down to around 255. So I'm going to put an alert there, but I probably won't pay attention to it because I don't really know this company. And that's just going to be a below 255. If it goes off, I'll look at the chart and see this, and maybe I'm interested, maybe I'm not. But something I think is also important to consider with semiconductor stuff, the market cap is $540 million, so it's not that huge. So, maybe it'd be nice to look for, semiconductor company that's worth a little bit more, a little bit safer, or maybe to go with an ETF like the SMH. Shake my head. This is the VanEck Semiconductor ETF, not leveraged. Just looking at this, at a glimpse, this looks like it could be a bull flag. And so with that, we can do a Fibonacci extension. Let's see, this is not what I want over here. Fib extension So from the low of 170.11 going up to the high here of 249.44 and then pulling back to the low from last Friday at, I believe, 234.59 was the low. We got that fib extension. And so that will suggest a move that's the distance from the bottom here to the top taken from this low. And so as you can imagine, that's a pretty big upside move. And so that would be suggesting price could be getting up to here off the charts to 213.92 or right around 214. Sorry, 313.92, right around 314. But maybe, 300 is a good take profit level. Maybe 310 is a good take profit level. Or maybe I'm wrong about this because maybe we can see that there is maybe a little bit of a trend line here. Did break above it a little bit here, got some fake out breaks above it, but we're below that level. So that makes me feel like it might be one to be a little bit cautious around. So maybe this is a bull flag, maybe it's not. And what we do see with this is volume was high over here and then price started to move up. Over here as it's been consolidating, volume's been lower, but its volume's actually increased. But it's kind of increased as price has gone up, but then pull back. So I don't know, this is tough. I'm not the best at analyzing this, but I would say what we want to see, what would potentially confirm that this is looking good, is seeing a close, not a wick, a close above the highs from this consolidation. So maybe that's a way to play this or to keep an eye on this. And so the high from May 14th was at a price of $249.44. So I would say that if price does close above 249, maybe that's a suggestion that, hey, this is potentially breaking out. But maybe the day after that it breaks down. Who knows? Tough to say. But generally, I think this looks like a bull flag. And I think it looks like things could be going higher. But if the stock market's starting to pull back, if Bitcoin's pulling back, maybe we're not going to be hitting new all-time highs. And maybe this pulls back to the trend line that I have doodled here, which would be a reduction in price from the close by about 8%. Whereas if we were to go up to around 300, that would be a percentage move, approximately up to 300. That would be around a 24% move to the upside. So there's some potential there, but there's always risk. So good to manage that. Stop losses, whatever. We also do see these gaps to the downside. So just like this gap here, the closing price from May 9th was at a price of $223.40. So maybe price does come down to there. So keep that in mind. It's a little bit risky with that gap to the upside. But now let's flip over to the next one on the list, which is going to be Applied Digital. We did. I think I had kind of pointed out, I circled apparently the midpoint of that trend channel, and price has gotten up there. I would say I'm always trying to be cautious if things are up. This did go up. I would say maybe move this doodle like that, and then maybe it pulls back to test 6 or 612. That is like the lows from over here, acted as support over here, acted as resistance over here, a little bit of consolidation below there. So yeah, I mean, I think that this could be heading down to around 650 or 6. So maybe those are good levels to buy back at or, consider looking at. But it could also be breaking down lower. I will adjust this Fibonacci retracement to extend up to the high from actually over here, which was 771, marked there, and 331 as the low. And so that orange line that I was just talking about corresponds with the 382 at 603. So yeah, I mean, I feel like this could be at this point pulling back to $6. So that's what I would be looking for. But, I might be wrong again, and maybe this does go higher. But thinking about the potential of it going higher and maybe expressing some concern, maybe some bearish signs, something clearly stands out to me is that we do have, as I was pointing out here, but I was wrong about it. I was a little bit early, but still, if we adjust the trend line, We still have lower highs, although getting close to being flat, but still lower highs. What do we still have in the RSI? We still have higher highs, and we have a trend of higher highs in the RSI, whereas we have a trend. Really, I mean, you can just look at it this way, though. It's not really a trend. It's just a lower high. That's hidden bearish divergence. So I think that this, at this point, is likely going to be coming down to $6. So if I were to bet on it, if I were to be in this position, I would bet on it coming down to 6 over breaking out. But I, of course, could be wrong. In the overnight trading, it is below 7, and it closed Applied Digital at 704. So yeah, maybe we get a whatever percentage discount, I don't know, down to $6. So that's what I would be considering. Benjamin, I'll see if I can do Mara at the end, but I'm way past my bedtime. So generally, I think it's probably going to be cooling off. But yeah, we'll see if I can get to it. I got a few more to go over here. And so Applied Digital, I got that. Then I will switch over to Qubits, D-Wave Quantum, and then I'll also talk about QTUM, which is also a quantum ETF. So whereas D-Wave Quantum is a stock, Qubits, which closed at 1627. I think, massive moves to the upside. So these doodles that I drew up here, I mean, this one was correct. The arrow going to the upside. I did not expect it to go that high. But yeah, I'm just going to delete those so we don't have too much clutter. But yeah, I mean, looking at this, maybe there's something interesting we can do. Maybe I can do this blindly. Just drawing a trend line or array from the highs over here, intersecting with the highs over here. Where does that take us? Into the future. We actually broke above that. So yeah, I mean, and we see like the RSI hit a high of 85.11, clearly very overbought, but maybe that level that I just drew, kind of arbitrary. You saw how I drew it. Maybe that acts as support, but maybe I want to draw it more conservatively, like from the highs over here. And that would be, look at that. That intersects beautifully with the high before the gap up. So yeah, I mean, I could see this pulling back down to around $14. And let's see, got some of these legacy. I mean, this was a Fibonacci retracement, the 786. That was a great dip buying opportunity at 6. Now with it at 16. Let's consider a dip buying opportunity with a Fibonacci retracement. So going from the low over here at, let's see, 577, and then up to this high of 1977. 77's lots of them, so that's kind of interesting. We do have the 786 at 877. Man, I don't know about you guys, but I get kind of weirded out when I see repeating numbers. Lots of 77 senses. 786 there. Price could be coming down to there, but I would feel like that's getting greedy with it, expecting it to come down to sub 9. What I find compelling is this purple line and this uptrend that I just drew very casually. And so that purple trend line corresponds with the highs over here, as well as the highs over here, which we nearly broke above but got rejected. Notable level, important level to be paying attention to, has historical significance. Now we've broken above that level, so I could see us pulling back. And so with that 786 up there, let's add the 618, see where that lands. So the 618, wow, perfectly on that purple line, right around 1112. So I would say that Qubits could be coming down to 11, but maybe it finds support at this trend line. So let's also throw up that 50% retracement to see about that. That's a little bit lower, maybe 13 would correspond with this gap fill. I'll draw that up in a second. But maybe the 382, that could potentially be some support. 1442 or 1450, maybe $14. So I think that Qubits, I think that quantum in general probably needs to be cooling off. Lots of levels to the downside here. I'm going to just make that trend line light blue so that we can distinguish it. But yeah, lots of levels there. But this gap that has yet to be filled, that is going to be coming to the closing price from May 19th. 13.15. And so, yeah, I mean, I'd say I'd feel more comfortable once this cools off. RSI pulls back a little bit more. It's now below 70 at 66.08, but will be nice to see it generally cool off at least to around 13 bucks, maybe 13.50. I don't know. But maybe that gap doesn't get filled. And that's what I wanted to do. I wanted to make that a dashed line and make it blue so we know there is a gap there with that closing price at 13.15, so I can lock it in there. But yeah, so that's qubits. Hopefully that's helpful. And then now looking over at quantum, this one looks like, yeah, overextended, bearish engulfing candle. So I think we could just do, quick and dirty Fibonacci retracement there. The 382 that kind of corresponds with the tops over here. Maybe there's some resistance there. All of this consolidation, that would be a price pulling back to around 78, or maybe the tops over here around 80. So I would say I wouldn't really want to be getting back into this until, or, I wouldn't want to be going long or going, anything until it comes down to around 80. But note, I have that as an orange line, not a green one, because I'd be cautious, see maybe this does go lower to any of these fib levels to the downside. And also note, very interesting, this also has a gap over there. The closing price on May 9th for QTUM was $80.13. Let's make sure I got that right. So yeah, I'm just going to lock that into place, make that dashed, make that blue, and make sure that it is the correct gap fill level at 813. So maybe there's something there. So I'd want to see a little bit of a cool off in the quantum sector before going long. And then I'll just go over ChargePoint, and then I will look over Mara real quick for Benjamin, a loyal follower. So yeah, I'll be happy to do it. But yeah, ChargePoint, bearish engulfing candle, but we still have this close above this uptrend. And, this was a higher close, about the highest close here, but it did kind of get rejected. It didn't make its way up to $1 like what happened with plug, but it did get a pretty nasty rejection, down 5.57% on the day, and closing at 72.35%. We can see that it was earnings. Was it earnings? No, earnings are coming up. But so BRP beats earnings. I don't know why it's popping up on ChargePoint. But ChargePoint from the NASDAQ here 2 days ago, ChargePoint Holdings rises yet lags behind market. Some facts worth knowing. And I had kind of mentioned that. But yeah, this is still above that uptrend. So I'm not really too concerned technically. If I do compare this with plug, the volume on ChargePoint has been a lot lower here. That suggests this is more like an accumulation pattern, whereas plug has a lot higher volume. That suggests it could be more distributive. And so that makes me think that ChargePoint structurally, with my limited knowledge of Wyckoff analysis, I'm learning it. This seems like it's better, more bullish, more cumulative than plug, but with the looming possibility of a reverse split, I think it could be heading lower, and that would be, needing to be getting 30 consecutive closes above $1 a share by August 19th, which is this red vertical line here. And with this earnings coming up on the 4th, I believe, there might be some sort of an announcement or maybe a vote following it that there needs to be a reverse split. So good to be cautious about that. But yeah, I maybe sold 100 shares at 72 cents, but I got out lower than the closing price from today. But that's just for me risk management. It's not about being bearish or being bullish. It's about I'm spread too thin, too many speculative stocks. Some of them may fail. Not saying ChargePoint will, but it could. I've seen it happen. So just wanted to take that risk off the table. And I don't have any puts on ChargePoint, but I do have one on plug. But yeah, let's pull up Mara. I believe I didn't add to the call position that I had today. I do believe I have a limit buy order, maybe for one share at 14.39. I'm just going to pull that up out of curiosity. Let's see. Mara. 14.39. Yeah, just one share. I'm a holder of 5 shares with an average price of 15.47. Nothing too exciting there. But I do have some calls, which is a $50 strike. I've got 11 of them with an average price of 98 cents. And that contract is this one, the $50 call, $50 strike that expires in January. It's got over 200 days between now and expiration. My average is up here at 98 cents. I had some limit buys placed at 90 cents, 80 cents, 70 cents, just one contract each, so nothing crazy. I only have 12, but basically my thesis on Bitcoin, which I will go over on Crypto Corner Sat Stacker, so make sure you tune in for that if you want my perspective on crypto, or I do begin with Bitcoin after I go over my intro, and so that might offer some perspective on Mara. But yeah, I do also have another limit dip buy, but placed at 65 cents. Just one contract over here if that does go lower. But yeah, I mean, I think that, let's see, from Ticker Request Live, let's pull up Mara. Yeah, I mean, this, like, it seems like it's kind of testing this uptrend, but now we got our first close below it. So that's a little bit concerning. But I had doodled out previously that this could be coming down to maybe around 12 over here, but maybe with a bounce around 13.62. And so thus far, you know, I've been wrong as far as the dip to the downside, but hopefully I put it on the table that there's a possibility of Mara coming down to around 13.50, even 12. But still, my thesis would be bullish overall, that those would be dip buying opportunities, discount opportunities, because I view that Bitcoin's going to be higher later this year, and I think that will correspond with a higher price in Mara. Getting up towards 50, whether it gets to 50, I don't plan on holding those contracts forever. But yeah, I mean, I would say the dip buy levels potentially, just this 618 at 1439. Like I said, I got a one share buy order placed there. If that gets filled, I place another dip buy order for one share. Again, not very big because I'm going bigger with the contract. But that would be a limit dip buy at 1362, which corresponds with the 786. But if it does break lower than that, the 100% retracement looks like be coming down to 1263, which was the low from May 6th. And if it does break below that, still higher lows, bigger picture, but shorter term, that would be lower lows. And maybe that's a shakeout before going higher. And so I do think that with that being said, it's probably important to pull up Bitcoin. So I'm just going to do that over here. Bitcoin, US dollars, and Coinbase. I'm going to go over all of this stuff on Crypto Corner Sat Stacker, so make sure you tune into that if you're interested. But yeah, I mean, I had a dip buy placed for Bitcoin at 105, and the low for today, May 29th, was 105.315. But considering the futures, or that rollover based on GMT, Greenwich Mean Time, the low for Friday the 30th was 104.624. I got my limit dip buy filled. Is it going to go lower? If it does, I'll be happy about that. If it doesn't go lower, I'll also be happy about that. I do very boring daily DCAs with Bitcoin as well as Ethereum and other cryptos. But this past week, I did place a limit dip buy for Bitcoin and Ethereum. Ethereum hasn't hit my level, which is a more aggressive dip buy. Bitcoin has. It's half of my normal daily DCA. So not a very massive dip buy, but, nice to just, add a little bit, take advantage of the dip. But yeah, I mean, I could see 104 consolidation over here, right around there, that being an important level. And of course, 100,000 being a psychological level. Any price action below 100,000, years in the future, we're going to look back and be very disappointed we weren't more aggressive when Bitcoin was below 100,000. We'll have legend status if our average Bitcoin price is below 100,000. But yeah, so I'm just going to add Mara to the list so I can add all of the tickers, not as timestamps, but just in the description and in the post on X that I will do. And then I will also I actually already went over Bitcoin, but I'll add it again at the end. But anyways, that was fun. A much longer stream than I expected. I'm going to be exhausted tomorrow, so I got to get going. If you did enjoy this, me sharing my thoughts, make sure you like the video. Share your thoughts in the comments and in the chat. It's been fun getting all of your guys' requests. Hopefully my thoughts were helpful. Make sure you subscribe. It's possible I won't do a video tomorrow, just taking Friday off. Maybe if I'm inspired, I will. But I will be doing Crypto Corner Sat Stacker on Saturday, and I'll be doing Ticker Request Live Sunday evening at, 10 p.m. Eastern. I pushed it up an hour just because it's still daylight here at 9 p.m. Eastern, and because I'm in the Midwest. And I just want to enjoy that daylight while I have it. So yeah, 10 p.m. Eastern Sunday. I'll see you guys for that. Otherwise, I might just do a video tomorrow, and then Crypto Corner Sat Stacker is a video, not a stream. But yeah, I hope you guys have a wonderful rest of your evening, a great Friday, whether that's in the markets, at work, or just